Hello and welcome to Business Reporter's The Future of Banking and FinTech campaign. I'm Ashley Blake. Over the past decades, fintechs have increasingly encroached on the space once occupied by traditional banks, with a focus on customer-centric technology that removes friction points and enhances the overall customer experience. One service offered by fintechs is Buy Now, Pay Later, which allows customers to delay payments on purchases. But banks have struggled to integrate this into their offering, with customers predicted to spend in the region of $1 trillion globally via Buy Now, Pay Later over the next 5 years. Banks stand to lose out. But there is a way for them to integrate Buy Now, Pay Later and thereby compete with fintechs. This is what we're going to discuss today with Adam Hughes, CEO of Amount. Adam, good morning.
Good morning.
So, US banks are losing $10 billion annually to fintechs when it comes to Buy Now, Pay Later. Why is this?
Buy Now, Pay Later saw massive growth in 2021. 50 million US customers used the product alone. We've been surveying these customers via our relationship with Payments.com, and the data is really compelling. There is strong interest across generations, from baby boomers all the way to Gen Z, as well as income brackets. And so to us, that's extremely exciting that this is a product that customers really like. When you see net promoter scores that are extremely high, satisfaction rates that are extremely high, and we fully expect that growth to continue. Customers are very clear that they like multiple flexible financing options when buying things online and in store. And fintechs have been faster to recognize that over banks, and they've come in and really filled that gap and provided the products that customers have really responded positively to.
Okay, so you say that fintechs have been fast to respond, but banks are lagging behind. But you also implied that banks have their strengths and plenty of opportunity to play a significant role in facilitating the Buy Now, Pay Later. But how?
We think banks can play a massive role in this space, and there's a couple of reasons why. Number one, there's a massive trust factor that banks have with customers. In many cases, banks have been the bank for an American family for decades, and so there is a tremendous amount of brand equity that's been built up over that time. Customers may not love their bank, but they certainly trust their bank to hold and be an effective storage facility for their money and move money around and payments provider, et cetera. So when a bank can provide additional financing options, that goes a long way with the customer from a trust perspective. Number two, banks have significant data advantages over the pure play fintechs that are in the space. Typically, a customer is using that bank account for their direct deposit information. So banks have a treasure trove of information in terms of income, in terms of the way the customers are moving that money around. And so banks can be extremely innovative, as well as a bit more flexible around things like term and dollar amount, getting more advanced around APRs they can offer, as well as that payment schedule to really tie in with that direct deposit date. And so just a lot more ways that a bank can really hit the mark for a customer where they're at in terms of their financial situation. Number three, banks have a big advantage around just having a one consolidated view for the customer. Customers are typically logging into their bank account every day to get their checking and savings account information. If they can also see their credit card and their Buy Now, Pay Later transactions, that goes a long way in terms of giving a customer that single view in terms of their overall budget, which can go a long way, versus having to log into multiple different fintechs and consolidate that information on their own. And so for the trust piece, for the data piece, as well as for that consolidated view, banks with the right tech partner can be massive players in the space, we think.
So trust, data treasure, and the consolidated view of data, it all sounds like banks are well positioned. So building on these values, how is Amount helping?
In Buy Now, Pay Later, there's pre-purchase products, there's post-purchase products, there's split pay products, there's longer installment products, and that can be a bit overwhelming for a bank that's just stepping into the space for the first time. And so Amount can bring that level of expertise to really understand the use case and strategy that bank's trying to roll out and really make sure that we're hitting the mark. There's a couple different value adds that Amount brings to the table as well. So number one, flexibility. There is not all integration with a merchant is created the same. And Amount has 20 different pathways for a bank to take advantage of, and really understanding that architecture for individual banks can be very, very different. And we have experience really across the board of being very flexible in terms of the way we can integrate with a bank and integrate with a merchant partner to make sure that that experience is seamless and embedded. Number two, speed to market. What a bank would tell you often is it's going to take them years to build this type of product and experience in-house. And Amount can get this product live for a bank and for their merchant partners in a matter of months. And with how quickly this space is evolving, that is extremely valuable for a bank to know that out of the box, they're going to get access to the right product in the right space. And then number three, the right UI and CX. That's extremely critical to make sure that you have the right digital customer experience when offering this product. And Amount has lots of expertise around understanding what the expectation is for that customer when they're buying things online, as well as what products and when to offer them. And a bank can come to Amount and really get that UI and CX out of the box, as well as a testing framework that as the space evolves, that the bank can test and iterate to make sure that they're consistently hitting the mark for that customer.
You've listed a few areas of where you can help. Which of these are most popular though? Where are banks finding the most success?
Really, we see a bifurcation across the size of bank. Typically, larger banks are looking to start with their existing merchant partners. In many cases, those merchant partners are asking for the buy now, pay later product because their customers are asking for it. Customers like the product, satisfaction rates are really high. And so then merchants are asking for the bank where they have an existing relationship with to offer the buy now, pay later product in addition to the other financing products like credit cards. So that's a great way for a larger bank to immediately step in and leverage their existing relationships to get involved in buy now, pay later. Smaller and medium-sized banks may not have those existing relationships. And so by leveraging the Amount platform to get access to merchant networks, to card networks, where they can immediately get access to millions of merchants via MasterCard as an example, would be a great way for the smaller and mid-sized folks to play and get immediate value via the Amount platform.
Okay, so let's look into the future. What should the industry expect and what's next for Amount?
What's next for the industry, the data is pretty clear in terms of the product that customers are looking for. Customers want a single card that can flex between credit, debit, and buy now, pay later. And that's dependent on where they're buying as well as that transaction size. And so just giving them that convenience in that single product is going to be really critical. And we see lots and lots of partners moving in that direction, and our technology at Amount can support that. We've always viewed at Amount that it was not a if, it was going to be a when the card networks decided to play in this space. And that time seems to be now. There's been lots of press releases from the big card networks, Visa and MasterCard to name two, that are saying that this year they're going to start playing in buy now, pay later. And we think that's going to be really impactful because, again, the card networks have access to millions of merchants, and it's going to allow a smaller mid-sized bank a great way for them to start in the space. And Amount can be the connective tissue between that issuing bank, the card network, and other critical merchants like with Marqeta, who's Amount's virtual card provider. And so a great way for a smaller bank to play in the space. And so we really see the industry going to that single card product that has buy now, pay later capabilities, as well as the card networks really to start to be a more impactful player in the space.
Adam Hughes, CEO of Amount.